Ladies and gentlemen, please welcome Oliver Velez, Chief Trading Officer and CEO of iFund Traders, inaugural keynote speaker of the First Traders Expo, international best-selling author, world-renowned trader, and entrepreneur, is one of the world's most respected and celebrated traders of all time. In 1999, Dow Jones dubbed him the Messiah of trading. Today, in 2020-2021, he continues to be defined as one of the most influential leaders of his generation. Oliver, great to have you with us today.
Thank you so very much for once again having me, and it's an honor to be here. So, without any further ado, I would actually like to maximize my time with you. I want to first of all thank all of you for joining this session, being participants in yet another Money Show event. But I'd like to sort of delve immediately right into our topic today. Today, I wanted to talk to you about how to accumulate stocks. And I believe that this topic is going to increasingly become more and more important as we move deeper into 2001, and certainly as we approach and start to move into the next year as well. I think that we are overall in store for an inflated market to cool off and to give back a little bit of its gains that it so impressively achieved in the last year. But I think that um, it's important to know how to prepare yourself for the next cycle back to the upside should markets start to decline. And while most people, I believe, think about selling when markets decline, we as true professionals think about picking specific things to accumulate during those declines to set ourselves up for the next cycle. So I want to talk to you about that today. But before I do that, for the benefit of those who have no idea who you're talking to, listen, my name is Oliver Velez. As mentioned, I placed my first trade in 1981, guys. That makes me a pioneer, if not a dinosaur in this industry. My first professional job on Wall Street, December 6th of 1986. I had a very illustrious 8-year career, went on to start my own firm off Wall Street. Many of the major Wall Street firms were my clients for over a 12-year period. I built one of the largest advisory firms in the nation, in the United States. Became known as the father of swing trading. Founded Pristine.com, or Pristine Capital Management, in 1994. That went on to be ranked number one in America by Barron's in 1998. The Dow Jones dubbed me the Messiah of trading in 1999, and this organization chose me to be their inaugural keynote speaker all the way back in 1999, and of course again in 2000 as well. I'm the best-selling author of 5 uh, trading books. These 5 books sell more copies than virtually all other books on the topic of trading the markets for a living combined. These books are in 5 different languages: English, Spanish, um, German, Japanese, Mandarin. And if you just um, search on Amazon or Google Oliver Velez, you'll find all of those reference materials. I am um, I have over 10,000 equity, forex, and now cryptocurrency traders throughout the world that span over 96 different countries. I continue to spread the gospel of trading as I've done for the last 27 years of my career, and I believe I'll do that until the day I pass. I continue to advise and speak for financial organizations globally. And so that's who I am. All right. For those of you who have no idea, this was actually an article I think was written during my, uh, uh, based on my first talk for the Money Show all the way back in 1999. And this is the article where Barron's ranked me and my work number one in the United States, the number one source to go to for true professional educational content and training. This is an image of some of the books that I've written in the various different languages. And of course, if you were to Google Oliver Velez books, you'd sort of see a page like this. Okay. I strongly encourage that if anything I speak to you about today is interesting, follow me. Follow me on Instagram, certainly on my YouTube channel. I have over 200,000 people that take in my content every single day, absolutely free. I spend a lot of time to make sure that 365 days a year, I'm putting out something that can be beneficial to you reaching that ultimate goal that I think a lot of us want, which is trading mastery in the markets. Okay. I have YouTube channels in English, Spanish, and Portuguese as well. So follow me. Subscribe, click the bell in the upper right hand corner. Make sure you get notifications every single time I put out a piece of content out there. Okay. All right. How to accumulate stocks like a pro. Now, what I actually want to do, I don't want this presentation to be a slide based presentation. I actually want it to be a little more I want to be a little freer in the way I present this to you. So what I'm going to do actually, first of all, is tell you what we need. Now, there's only a few basic things that we need in order to know how to accumulate whatever item you're thinking about accumulating, like institutions, like professionals, not random. We want to do this in a very, very um, detailed, specific, professional way. All right. Now, things that we're going to need a monthly chart. Now, if you followed my work for any period of time, you know that I am technical in my approach to the markets as opposed to being fundamental. It's not that fundamentals have zero value. I just believe that technicals help us better time our actions, while fundamentals help us better look into the past of things. And so trading is about the now, which is technical. The fundamentals are all about, investigating the past. And while the past is important, the now is what I spend the vast majority of my time perfecting and delving into. And technicals give us the ability to really focus in on what is happening now. So, monthly chart. It's a technical item. We're going to look at a chart where every bar represents 1 month of trading. We're going to need a calculator, or you can use your mind, because the math that I'm going to teach you regarding this accumulation technique is very basic. If you're 12 years old, or if you have the intelligence of a 12-year-old or the education of a 12-year-old, you'll be able to do this without a calculator. Trust me. We're going to need a maximum loss amount, which I'll talk to you about. We're going to need conviction. All right, and nerves of steel, or what some people in the cryptocurrency community say. We're going to need diamond hands, or in the equity community as well. We're going to need diamond hands here. All right, when we go into accumulation mode. Now, let's take a look at two things. I'm going to use Tesla, and I'm going to use Bitcoin as two specific items that I personally believe have exponential growth potential in the future. However, they both might have periods along their exponential rise in the future. They might have periods of relatively sharp downdrafts. And I'm going to show you what I do, how I teach my traders to accumulate during these downdraft periods to set themselves up to be golden in the next cycle, because everything trades in cycles. Nothing goes up in a straight line. And so, in many respects, what you do during the downdrafts determine how brightly you shine during the rises to the upside, the future rises to the upside. And so this is all about how you utilize the downdrafts to be golden later. Okay. So why don't we do this? What I'm going to do, let me make sure I have this here. I have this on full screen here, right? So what I want to do is I want to show you, let's take a look at Tesla. Okay. Now, what you're looking at here is a monthly chart of Tesla. I want to show you the time frame so that you get this right. We're looking at the monthly time frame here, not the daily, not the weekly, but the monthly. Okay, so every bar represents 1 month of trading. And as a result of that, we're looking at price data that spans from 2013 all the way to the current month. All right, as we can see, Tesla's not having the greatest month, all right, of its history so far. And a lot of things actually are starting to look like this. But okay, now, I'm not going to focus on moving averages, but I will tell you that I tend to have a 20, when I look at things long term, I tend to have a 20-period moving average, a 50-period moving average, a 100-period moving average, and a 200-period moving average. So that's just a side note. And the moving average that you see on this chart is a 20-period simple moving average, I believe. Yes. Okay. Yes, it is. All right. But that's not really important. So what I want to show you utilizing this chart is just a simple math, um, a calculation based on the price of Tesla. Now, assuming that you are interested in building a position in Tesla, assuming that you have conviction that about its future, assuming that you believe for a variety of reasons that the future price, the future value of this company is going to be higher. It may not be higher in the next year. It may not be higher in the next 18 months, but in the next 4 years or the next 5 years, maybe it's higher. You have strong conviction of that. You're going to want to use downward moves to accumulate. We want what we value at cheaper prices, but you have to be able to do this intelligently. Okay? Because you can be right on the future direction of something, but actually choose the wrong time, be wrong with your time, and completely get the entire game wrong. So this is going to prevent you from doing that. So here's what I teach my traders to do. I teach my traders to take the ultimate high or something close to the high of the item's price history. Now, I believe that the ultimate high is something like 940 or so, or what have you. So, you know what? Let's just say that, let's make this very easy. Let's say that, let's use 900 as our ultimate top price, okay, of Tesla. Now, what I want you to do from here is I want you to divide the ultimate price into thirds. All right. So basically, if we were to take 900 and divide it by 3, you would be dealing with $300 price blocks. So $300 down from 900 is 600. $300 down from 600 is 300, more or less. Let's do that here. And of course, another 300 is 0. All right. But I don't want you to go 0 from here. From the last one, from this one, I want you to cut 300 in half. And that would bring us about 150. Okay. So that's what we do. We go 1/3 down once, okay? 1/3 down twice. And after 1/3 down twice, we cut that number in half. And that's our third area. Now, what do we want to do? When our desired item drops by a third, so 900 to 600. So we're there right now with Tesla. That's why I picked it. Okay. I picked it to show us something that we can do this with right now. All right. What I teach my traders to do is start your accumulation at 1/3 down. So we're going to start with 1, and I'll explain to you what 1 means in just a moment. Okay. We're going to start with 1. Okay. If Tesla were to reach the second level, we're going to start, right, with 3. I'll tell you what these numbers mean in just a bit. Should Tesla reach the third level, we're going to go to 5. Okay, we're going to go to 5. Now, what do these numbers mean? These numbers are going to be called they represent the size of your buys. So, for instance, I could say that at level 1, I'm going to buy 100 shares of Tesla. And then at level 2, I'm going to buy 300 shares of Tesla. And then at the next level, I'm going to buy 500 shares of Tesla. So in this scenario, I would have 900 shares of Tesla. But this might be too small for someone else. Someone say, well, Oliver, I'm going to buy 1,000 shares of Tesla at level 1, 3,000 shares of Tesla at level 2, and 5,000 shares of Tesla at level 3. Or all of those might be too big, in which case someone says, listen, I'm going to buy $100 worth of Tesla at level 1. I'm going to buy $300 of Tesla at level 3, and I'm going to buy $500 of Tesla at level 3. Should I get there? Okay. Or you can even go smaller, $10, $30, $5. The 0 on the other side of 1, 3, and 5 doesn't matter. You make that fit your specific personal financial situation. Whether it's 10, whether it's 1 0 after 1, or 2 zeros after 1, or 3 zeros after 1, or 3, or 5, doesn't matter. It's just 1, 3, and 5 that are the important thing. So please understand that anyone can do this. Now, when you're accumulating on the way down, okay, the idea is to do it in a fashion that continues to drop or lower your average cost. So when you first make your buy at 600, more or less, your average price is your first buy, 600. But when you buy 3 more at 300, okay, if you were to buy 1 at 600 and 1 item or lot at 300, your average is in the middle of 300 and 600. That's quite obvious. So 1 at 600, 1 at 300, your average is exactly in the middle. Okay. But if you buy 3 instead of 1 at 300, your average cost is not in the middle. Your average cost is lower. So now your break even is there, and it doesn't take much bounce to go past break even into profitable territory. However, if you drop lower and buy 5 at this lower level, your average cost gets lowered as well, so that now a bounce off of the low from here gets you back to profitable territory much sooner. Now, I know that some people might say, Oliver, this is like catching a falling safe or catching a falling knife. And in a sense, it is. This is why I told you, you have to make sure you do your homework to know the specific item that you want to do this with. You have to have conviction. You have to know in your heart and soul that what you're doing this on is on something that you believe is going to have a far more greater upside cycle during its next move to the upside. And so, for instance, if we were to look back in the past and do this with Amazon, all right, it would have worked extraordinarily well. I remember when Amazon had a 90% drawdown. And if you did this on the way down, and wow, when Amazon moved back to the upside, you'd be fabulously wealthy. That's life changing moves right there. If you did this with Apple, if you did this with Microsoft, if you did this with Tesla earlier, if you did this with Facebook, if you did this with a variety of things, if you did this with Bitcoin, all right. So you have to be able to know, you have to come up with what you believe deserves your money on the way down to prepare for the next move up. That is not what we're talking about here today. I'm assuming that you know, and I'm telling you that we're doing this with Tesla. All right. We are doing this with Bitcoin. All right. And we're taking the item and splitting it into thirds, as I've explained it to you here, and going in at those specific levels, keeping that average price relatively close to the current price of now, so that a brief move back to the upside instantly moves us back into profitable territory. So that should Tesla, and in most cases, you don't get all the levels achieved, but should all the levels get achieved? 900, 600, 300, 150. Okay. Usually you don't get all the levels achieved before there's a run back to the upside. And I would say in most cases, it's there's about a 15% chance that all levels get achieved. So it's very low. So normally only one or two levels get achieved. And so in those scenarios where we don't get all three levels, other things have to be done to build up our position. And this is outside the scope of my talk today, right? Where we have two other things, two other accumulative things that we do in addition to this to help us accumulate our position in preparation for the next move to the upside. But today, I wanted to just talk to you about taking an item, splitting it in the proper components, and knowing mathematically when you should go in for more and by how much. Remember, we keep this ratio. The ratio is very important. We want one, whatever one is for you, $10, 100, 1,000, 10,000. The zeros after one don't matter. That's you're going to match to your financial situation. So we want one, we want three. Okay, so now we go to three, whether that's $10 or $30 or 100 or 300 or 1,000 and 3,000. Okay, and then we want five, whether that's $50 or 500 or 5,000, whether it's dollars or shares, doesn't matter. You tailor this to your specific scenario. And this way, you come in like the pros do at these specific spots, and you come in a specific way that keeps the average price controllable. Now, remember I told you that we need a maximum loss. You can't do this all the way to zero. That's not smart. So you've got to have a number where you say, look, I'm either going to risk I'm going to risk what I can lose. So in which case your maximum loss is zero. I mean, the odds of Tesla or something valuable going to zero like this is very small. So if you use zero as your maximum loss, if you're using an amount of money that you don't need ever, and it's just, you're going to play with that, okay, then your maximum loss can be zero. But what if you're not using an amount that you can lose all of it? What if you can't afford to lose everything you put into this play? Where you're going to have to come up with a number that's a line in the sand. And so that maximum loss number might be something like, listen, I'm putting $10,000 into this play. All right. So I'm going to over time make sure that I ultimately get all $10,000 in the play, but I am not going to lose more than 6,000 of it. So I've got a $4,000 cushion. Whatever number you come up with, you have to work this plan, right? You have to work that maximum loss number into this accumulation plan so that if at any point you reach your maximum loss number, the play just didn't work, you lick your wounds, you collect the rest of your chips, and you move on to something else. But I will tell you that usually what I bet on, I'm betting on something that I know, I believe has very low odds of ever going to zero. It's too valuable to go to zero. All right. Temporarily, it might have price corrections, but it won't go to zero. A Microsoft is not going to zero. An Apple is not going to zero. An Amazon's not going to zero. A Bitcoin is not going to zero. A Tesla is not going to zero. So because it's not going to zero, I will work with it without a maximum. I'll just make sure that what I'm dedicating to that play is something that I can afford to lose all of it should some black swan event occur and the item go to zero. Now, let's take a look at what we're doing. We're doing the same thing here, traders, with Bitcoin. Now, what you're looking at is a monthly chart of Bitcoin here, and let's take the top price. Let's even it. We can round the number. Let's take $60,000. All right, which is the high. All right. Now we've been doing this from below $4,000 traders in Bitcoin. All right. So this is the high, more or less 60,000. Now let's divide this in thirds. Okay. So if we were to divide this in thirds, we're going to go 20,000. We're going to have $20,000 pieces. 2040. Yeah. Yeah. We're going to have $20,000 pieces. So let's go $20,000 lower. That would be 40,000. And let's go another $20,000 lower, and you would go here. And so these would be your levels. All right, I'm getting a message here. Okay, 5 minutes, good. Okay, so we've got our levels. So where do we come in? All right, and remember, from 20,000, we split this in half. So this would be 10,000 here. So after 2, we don't go a third down more. We don't do another 20,000. We cut the 20,000 in half. So remember, 1, 3, and 5. Now, the odds of getting that lower level are not very high. All right. The odds of getting this level, maybe. Okay. Okay. Now, this is not the only way we accumulate, but it is one of the key ways we come up with the levels to get aggressive with. So whether it's, I'm going to go in, whether that's $10, whether that's $100, whether that's $1,000, whether that's $10,000, whether that's $1 million, the zeros on the other side of this one doesn't matter. Remember, the ratio is the important thing. So that when I go in around this level at 40,000, that's my initial average price. But if I go in it with 3 of the same amount as level 1, my average is no longer 40, and it's not in the middle of between, it's not at 30, which is the middle of 20 and 40, it's actually lower than the middle because I bought 3. So now I have lowered my break even point to this area so that any bounce up, now I'm at new high profit territory. I don't have to come all the way back here to be at profitable territory, or even here. I just have to come back above the red there. And if we ever get to this area, I bring that average cost even lower. And so a bounce from this level to here, I'm now totally profitable. Now, there are a lot of things out in the markets like don't throw good money after bad, don't buy on the way down, buy on the way up. These are not correct. As popular as some of these things are, all right, the general idea when it comes to long-term profit building, wealth accumulation, is that we must buy when prices are undervalued. And the only way you can do that is on the way down. All right. And this is the systematic way of turning a downdraft in something that's valuable into the the proper way to accumulate that item in a fashion that puts you in the best possibility to benefit from the next cycle. All right. And Apple's always going to have a next cycle to the upside. A Microsoft's going to have a next cycle to the upside. A Bitcoin's going to have a next cycle to the upside. A Tesla's going to have a next cycle to the upside. Do you understand? You must pick the right items where you're almost as certain as possible that there will be a future upside, but I'm going to take advantage of the current downside while other people are running for the hills. I'm going to build methodically into the position professionally for the next move to the upside, guys. And this is how we do it. It's basic, but it's extraordinarily powerful. And it's how we have built positions in a variety of things that have generated tremendous amounts of wealth, traders. So listen, if you're interested in if you're interested, traders, in um becoming just a little bit more serious with how we generate wealth. Listen, I do have a wealth program, guys. It's one of the most popular wealth programs in the world. I'd have to say, I'm very proud to say that. Lifetime fee, one fee, where we scour the earth every week, every month for some of the most amazing opportunities. You watch me do my buys, you watch me do my sells. You know everything I do. You watch many traders, hundreds of traders have watched millions of dollars be generated by the actions that I take. You know what actions I take in what before I take them. We do it together as a team. We do the research together. We do the searching together. We do the buying together. We do the selling together. This program has been in existence for over 10 years, a decade, and many people have become extraordinarily wealthy through this program. But for a 48-hour period, guys, it's 50% off. It's a $2,000 play. You can lose this in one trade, one play, but think about a lifetime of us doing this together. There is no expiration. This is not a course. This is a lifetime program. You know what I do on the option side. You know what I do on the equity side. You know what I do on the cryptocurrency side. You know every single move. We do it together. And there are hundreds upon hundreds of people all over the world who have become extraordinarily wealthy doing this with me. So I strongly encourage that you do that if you're interested, but I hope that what I've shared with you has some value. Remember, follow me on my YouTube channel. And once again, I want to thank the Money Show for having me. Thank you very much, guys.